All right, let's get right into it. Bitcoin is locked in this incredibly tense standoff, stuck in what a lot of traders are calling a frustratingly narrow range. You've got the bulls on one side, the bears on the other, and the market is just coiled like a spring, waiting for a big move.
So, the huge question on everyone's mind is pretty simple. Is Bitcoin staring over the edge of a cliff, about to take a plunge, or is it quietly building a launch pad for its next massive rally?
So which one is it? Well, in the next few minutes, we're going to break down this whole high-stakes battle. We'll look at the arguments from both sides, and more importantly, the key signals that could decide this fight once and for all.
Okay, first up, let's look at the case for the bears. Why are so many people convinced that a storm is brewing and that the price is actually headed lower?
This feeling is summed up perfectly by Trader Roman, who's basically calling his shot. I mean, that's not just a prediction, it's a declaration. It really captures this growing feeling of unease that's starting to spread.
So what's driving this pessimistic view? Well, there are a few things stacking up. First, you've got a classic chart pattern called a bear flag showing up, which often hints that the price is about to drop again. Then, you look at the on-chain data, and you see the whales, the biggest players in the game, have been steadily selling. On top of that, the price just keeps hitting a ceiling, really struggling to get past that key resistance level. And if that wasn't enough, there are these bigger economic headwinds, like a potential rate hike in Japan, which historically has not been good for Bitcoin. Put it all together, and you can see why the bears feel pretty confident.
But that is only one side of the story. The bulls, they have a powerful rebuttal. They're looking at the same market and arguing that underneath all that surface noise, there are incredible signs of strength.
And you see that view right here from Trader Superbro, who's pushing back directly, saying, not so fast. They think that bear flag everyone is so worried about is actually a fake out, and the market is really setting up for a surprise move higher.
The key word for the bulls is resilience. Think about it. The whales are selling, but the price isn't crashing. It's holding strong. Why? Well, it looks like it's the short-term speculators, the so-called weak hands, who are panicking and selling at a loss. Historically, that's a classic sign that a bottom might be forming. And then there's this giant pool of orders sitting just above the current price, acting like a magnet that could literally pull the price upward.
Now, to really get the bull case, we have to talk about a specific metric called the seller exhaustion constant. I know it sounds super technical, but the idea is actually pretty simple. It's a tool that looks for a very specific situation, when sellers are losing a ton of money, but the price itself has stopped going down. It's basically a sign that the sellers have run out of steam. And here's why that is so important. The last time this indicator looked exactly like this was right before Bitcoin ripped 33% higher. Now, of course, past performance is never a guarantee of future results, but for the bulls, that is a glaring historical sign that is really, really hard to ignore.
So you've got compelling arguments on both sides. It's a total standoff. What's going to break the tie? What are the actual key levels and events that you should be watching right now?
For the bulls, the magic number is $95,000. That's that big liquidity zone we were talking about. If the price can punch through there with some real conviction, things could get explosive, fast. On the flip side, the line in the sand is $89,250. That is the floor. If Bitcoin starts to close below that level, the bearish arguments suddenly get a whole lot stronger, and we could be in for a quick drop. And hey, it is not just about the charts. This week is absolutely packed with major economic data releases. We're talking crucial reports on inflation and jobs. Any one of these numbers could be the catalyst, the spark that finally breaks Bitcoin out of this range.
You know, beyond all this short-term price action, there's a much bigger, more fundamental shift happening. We keep talking about whales selling, but the real story is who these whales are is changing dramatically.
You've got the old guard, right? The early Bitcoin adopters who are finally taking some profits off the table. And then you have the new money, the ETFs, the big corporations who have been buying up everything the old guard sells. The thing is that institutional demand seems to be slowing down just a bit, and that's created this precarious balance we're in right now. It's a true changing of the guard.
And that leaves us with this final, fascinating question for the future. As these massive institutions become the new dominant whales in the market, will that actually bring stability to Bitcoin? Or will we just be trading one kind of volatility for a whole new institutional-grade version? The answer to that is probably going to define Bitcoin's next chapter.
So who's going to win this standoff? The bulls or the bears? We're going to be tracking these key levels and this whole changing of the guard very closely in the weeks ahead. To make sure you stay ahead of these market-moving shifts, just hit that subscribe button so you don't miss our next explainer. Thanks for watching.